Kevin coming to you live real quick from the CIBC building, and very quickly guys, I want to go over how the market moves. So I know a lot of you guys are brand new to trading, and I know it can get kind of confusing understanding the market, but I'm going to break down 3 different ways that the market likes to move so you guys can have a full understanding of how this works. Alright, so the very first way that the market likes to move, right, I'll write it right here. The very first way, it likes to move towards the upside. In other words, in an uptrend, right? So uptrend, right? And when the market is moving in an uptrend, there's a few ways you can actually identify this, right? So usually when the market comes up and it starts coming down, like this, it continuously starts to make what we like to call higher highs and higher lows. And the way you identify that, right, is by simply looking at the prior move compared to the next move. So from here to here, right, we have a higher low. So you would mark it HL, HL. And if that happens again, a higher low, right, then what you have is another higher low over here. So what happens over here? You're going to end up having a higher high, right? So a higher high in the market is essentially a higher point from the prior point, right? So higher lows, higher highs. You're going to have a consecutive amount of higher lows and higher highs in your market, right? So this is how you understand an uptrend. As you guys can see, it pretty much starts to trend all the way out towards the upside. And it does the same thing over here, and you see that upward trend where the market bounces from an upward trending resistance, right? And then an upward trending support. All right, and this is how you pretty much understand the concept of an uptrend, okay? And now, I'll break down to you the second way in which the market likes to move. And that's what we like to call a downtrend, okay? So a downtrend is essentially this, right? Where the market does the opposite of what we just explained. So the market will go from here, up, from here, up, from here, up, and to here, right? So in the prior move, we identified higher lows and higher highs, right? Here we're gonna identify lower lows and lower highs, right? So here you're gonna see your first low, right? Then you see this one that ended up closing lower than this low, right? So this is what we like to call a lower low. But now as we see the top, right, the same thing is happening. We see that trend of higher lows, right, on the upside. So higher low, lower high. Over here we see another lower high, right? A lower high. And then on the bottom, what do we continuously see? A lower low, right? So when you start identifying lower highs and lower lows in your market, that means that the market is going in a downward direction. So the momentum is going towards the downside. All right. So this is a very basic way of understanding how you could really read the market. And the same way we did it last time, right? We could do those same support and resistance levels, right? Where the market will bounce, right, from a resistance towards the downside. And over here, you'll see the market bounce off your support. Right? So resistance, support, that's how you understand that. Now, the third way in which the market likes to move is simply what we like to call consolidation, okay? And now this is a very important concept, right? Because you do want to trade in an uptrend, right? You do want to trade in a downtrend. However, oftentimes you do not want to trade in what we call consolidation. So consolidation, right, the third way that the market moves is sideways, right? It is sideways movement. So in other words, consolidation. All right, and within this sideways movement, what's pretty much going to happen is instead of having higher highs and higher lows, right, let's say we have a market that ends up moving just like this, right, where we see higher high, right? Higher high. Over here we see higher lows, right? Higher lows. What could happen possibly is when the market starts to hit, right, a prior point and then it doesn't want to push any higher than that higher point, it'll start moving sideways. So it'll find a support and resistance to start bouncing off. This right here, guys, what you guys see, this sideways movement, that's called consolidation. And usually it happens after the market stops trending up or after the market starts trending down, right? So when this occurs, a very simple way of thinking about it is that the market is building up strength. right? So the market is building up strength. Building up strength to do what is the question, right? Very simply answered, the market can either do what we call a continuation move, right? Where the market will want to continue towards the upward direction, right? Or we can pretty much see a reversal, right? A reversal is where the market was once in an uptrend and the market starts to continue towards the downside, breaks through what we had a resistance, right? Hits your support, right? Because breaks your support, hits your resistance, and then we now start to do the same downtrending movement, right? Which we then start to see as lower highs, lower highs, lower lows, and lower lows. So remember, you have your uptrend, right? You have your downtrend, and then you have your consolidation. So you want to trade in an uptrend. You really don't want to trade in consolidation because oftentimes the market is bouncing within that, right? And then you do want to trade in a downward trend. All right, so very, very simply put, guys, this is how you understand how the market moves. Only 3 ways the market likes to move, and you guys officially know how to do it.